We're back. More record highs in sight. S&P 500 heading for its first closing high in some 2 weeks. The Dow setting its second record close in a row today. It looks certainly like it's going to do that. Here to share how he is positioning after this recent run. Trying to read this. Treasury Partners founding principal and CIO Rich Saperstein. They cut to you at the right time. They took the camera off me as I was fumbling all this. How are you doing?
I'm doing well.
You feel pretty good about the market?
I am.
Yeah? More so than you have before? The election changed things for you?
Well, look, fundamentals are solid. We've got strong economic growth, full employment, accommodative Fed, declining inflation, and the Trump bump right now will lead to uncertainty. So we've got
It'll lead to uncertainty?
Yeah, it's going to lead to more volatility. So specifically, lots of uncertainty about tariffs, whether it's going to be higher or lower than what's reflected in the market, inflationary impact, trade impact, earnings impact. So expect 4 years of increased vol versus the last 4 years.
What about returns?
I think returns are going to be good because fundamentals are solid, and we're going to have rising earnings. You got $266 expectations on the S&P earnings for next year, which is a 10% bump. It is doable. And I think the environment is generally good with deregulation, more M&A, and lots of activity will occur next year.
I mean, you got a highly accomplished former hedge fund manager as Treasury Secretary. I mean, part of this has been the Bessent bounce, right? Since it was, became clear that he was going to be the one. The market seems to like that.
Yeah, I think the larger impact was realized in the bond market, where from the last Fed meeting, September 18th, bonds rates were up, 80 basis points?
Yeah, backed up a lot.
Yeah. And then when Bessent was announced, all of a sudden, market improved, rates dropped 15 basis points. So that's an indication that the long end of the market is less concerned about, a runaway fiscal deficit and prolific spending and more bond issuance and higher inflation. So it's a sign that the bond market vigilantes are calming down.
Rich Saperstein has been with us watching all of this unfold. One of the risks we really haven't discussed that much, geopolitical, moving into a new year. There's been so much optimism about the domestic economy. We really haven't focused that much. Investors seemingly haven't on issues that may develop across borders.
Yeah, what's interesting is that with the two wars that were going on, oil prices really have been subdued. And so you would have thought that with increased global geopolitical tensions, you'd see rising oil prices and weak stock market. But it's clearly moved right past that given the fundamentals that we're experiencing.
Areas that you like the most, are they the ones that have been really picking up since the election, the cyclicals, financials, industrials? I mean, we talk financials every day, and they've been hitting new highs almost every day. Or the ones that have been in a little bit of a slumber, big tech, for example? What do you think?
We continue to own big tech and look at Google as probably the most attractive right now. But I think there will be a broadening out, and we continue to add utilities right now.
You still do?
Yeah. Most recent one is NRG, which it's a $20 billion company with $2.5 billion operating cash flow and 21 locations where they could co-locate any type of large electricity demand. So there's great opportunity still in the utility sector, which should do well in 2025.
Still love munis?
Yeah, munis.
Not getting off that train. All right, Rich. Have a good Thanksgiving.
Thank you.
For being
Likewise.
with us, and thanks for your patience as well.
My pleasure.
As we went to the White House.